sticking to the US market, because some of the most expensive or valued companies in the US right now are in the tech sector. And I imagine that the investors who are plowing into that sector, obviously investors who can afford to do so. But I'd just like your take on that spot as a geography to park money, and whether you think that there is still room to get more in returns at the stage.
Well, very long term, there's always a good chance that tech will outperform because, for example, from 2000 until 2020, the Nasdaq beat pretty much every index in the world, but it was completely stagnant from 2000 to about 2014 to 15. So very long term, tech has always been more volatile, but it has produced better returns. Having said that, technology is heavily reliant on interest rates. So we've seen kind of emerging tech with the kind of Cathie Wood's kind of fund really being hammered by higher interest rates. But big tech, whether it's Apple, Microsoft and others, are in a very strong position, much stronger than big tech in 1999. So I think they could long-term benefit, but technology is inherently more risky, especially when you go to individual stocks. But very long-term, if somebody's just willing to, put their money to work for 30 years, I don't think anyone will necessarily regret just buying the Nasdaq as an index, for example. But individual tech firms did get ahead of themselves when it comes to the valuations, and the price to earnings ratios went crazy. And a lot of the projects that existed could have only existed in a 0% interest rate environment. And right now, even though interest rates are probably peaking, I don't see us going back to 0% rates anytime soon. And that will really hammer some of the smaller tech stocks and some of the tech stocks that maybe aren't profitable. But I do think long-term technology is probably primed to overperform. But anyone who goes into that space has to realize it's incredibly volatile.